Hey guys, Angel here with the Bullish Bears team, and I'm going to make this video today on investing in the stock market. So sometimes when you're new, there's different ways to do the stock market, and a lot of times people think of long-term investing. So where would you invest in the stock market when it came to investing in all of that? So investing is a way to set aside money while you're busy with life and have that money work for you so that you can fully reap the rewards of your labor in the future. And so it's money that's you're not going to touch right now. You're going to put it away, whether it's a 401k, whether it's a mutual fund, whether you purchase stocks that you think are just going to go up over time. With investing, there is also the risk of loss because, as you know, we had a downturn in 2008, and a lot of 401ks at that time lost all the gains that they had made. And there were people that got stuck with no retirement fund because the market crashed. So there is that risk when it comes to investing. But if you do it right and you diversify, then you're going to have a potential safe haven. Like if you invest in gold is a safe haven. So when the market goes down, the dollar loses value, gold goes up. So that can sort of help alleviate some of the loss in other sectors that you invest in. So if you go through a company, typically they'll do something like a basket so that you have multiple stocks in this basket, multiple sectors, so that if one is down, there's another that can potentially recover that for you. If all of it's up, that's really good. So it just depends on how you want to invest your money. There are stocks, which we know what stocks are. There are bonds. If we look at a bond is a fixed income instrument that represents a loan made by an investor to a borrower. So basically, it's an IOU between the lender and borrower. So bonds are a really interesting thing because it's an IOU and their owners of bonds are debt holders or creditors. So bonds are used by companies, municipalities, states, sovereign governments to finance projects and operations. So it's a really, really fascinating thing. So if you want to get into bonds, I would study up a little more on that. There's also mutual funds. So mutual fund is a type of financial vehicle made up of a pool of money collected from many investors to invest in securities such as stocks, bonds, money market instruments, and other assets. Mutual funds are operated by professional money managers who allocate the fund's assets in attempt to produce capital gains or income for the fund's investors. So a mutual fund is like a portfolio. So it's sort of like a basket trade where you have a bunch of people that are in a trade with a bunch of different stocks and sectors. So there are a lot of ways to invest into the stock market. You just have to decide whether you want to be a little more hands-on, whether you want to just leave it in the hands of somebody at a big company, whether you want to take control of it yourself. It's just up to you. There's no right or wrong way to invest in the stock market as long as you diversify, because the market can be crazy. And if you don't have diversification and you put all your eggs in one basket, you can end up losing all those eggs and the basket, and you don't want to do that. So investing is a great way for future. You want to just put that money aside, let it grow. You'll touch it when you retire. You can get stocks that have dividends and pay dividends, and you can have those dividends added into your retirement account. I believe Warren Buffett gets paid over $6,000 a day in dividends. So that's quite a lot of money. Of course, we don't have Warren Buffett money. If we did, that would be pretty nice, but we don't. So we can just start small with other stocks that have dividends. I believe like Walmart and any blue chip stocks that have dividends that can pay into your retirement account. Or you can do a little bit more of a risky thing where you hedge with options and you don't hold forever, but you do hold for a period of time. You can trade. You can be more risky. You can be more safe. There are a lot of ways to do it. Even like Acorns investing right now, where they will take the pennies and round up. Like if you purchase something that's like $3.75. They'll round it up to $4 if you use Acorns Investing, and they'll take that 25 cents and they'll put it in an investment account, and then it just slowly grows. And that's for like more for the millennials that have years and years and years to have that sort of return for them, as opposed to somebody who's like 50 and deciding they want to retire in 15 years. Obviously, 25 cents is not going to cut it. But there are a ton of ways to invest. It's just your style and how you want to do it. So you can research bonds, you can research mutual funds, you can research money market funds, you can research anything like that, and it all helps. Or you can get into a little bit more risky trading and do all of that, which if you do, you can head right over here to bullishbears.com, and I bet you we're going to have lots of slow internets because it's a little stormy-ish outside, and when it gets a little stormy, my internet decides that, I think they use satellite to power this internet, and it just decides it doesn't want to work. So sometimes it's a little slow. So if you want to learn more about trading, you can even use these things like candlesticks, and support and resistance can help with investing because it might help you get a little bit of a better entry so that you have room for your stock to grow over time. So subscribe to thebullishbears.com. You won't regret it as long as you're willing to put in the effort. And I hope y'all enjoyed this video. And if you did, give it a thumbs up. Follow us on YouTube. We have social media you can follow us on. And I will see y'all later.